In this video, I am going to break down a powerful multi-time frame trade setup that starts with a clear rejection from a 1-hour supply zone and ends with a sniper entry on the 5-minute chart. This kind of setup happens every week, and once you learn how to spot it, it can completely change how you enter trades. We are going to walk through everything, from the structure on the higher time frame to the buildup of liquidity to the exact trigger that told us it was time to enter. This is a textbook example of using top-down analysis to stay ahead of retail traders and align your entries with institutional momentum, identifying the supply zone. Let's start on the 1-hour chart. Right away, what stands out is the strong bearish structure. We can see that price made a significant move down from this zone before, and that tells us sellers are in control here. The move away was sharp and aggressive, which is a clear sign that there's likely a concentration of institutional sell orders sitting in that zone. So we mark this as our area of interest, our 1-hour supply zone. This is not just a random resistance line. This zone represents where smart money stepped in previously and where they are most likely to step in again. As price begins to move back into that zone, the first thing we notice is that the climb upward is slow and weak. Instead of strong bullish candles, we see small, choppy movement, a staircase pattern of higher lows forming a rising trend line. This kind of price action is a major clue. When you see price rising into a supply zone with weakening candles and clean structure, it's often not strength, it's a trap. This is how the market builds liquidity. Retail traders start buying the breakout. Stops accumulate below the trend line, and meanwhile, the smart money is getting ready to reverse the move. Momentum shift and break. What do we look for when price finally taps into the supply zone? We are not looking for a clean breakout. We are watching for hesitation. And that's exactly what we get. Price pushes into the zone, but instead of strong bullish follow-through, it stalls. It barely closes above the supply zone, showing clear signs of exhaustion from buyers. And then the key moment arrives. A powerful bearish engulfing candle prints, completely wiping out the last bullish momentum, and it cuts straight through the rising trend line like butter. This is not just a simple trend line break. It is a clear momentum shift. It is a structural break. It is a firm rejection from the supply zone. All three happening at the same time. That is our triple confirmation. And from here, the bias becomes undeniable. We're only looking for shorts now. So do we execute the trade here on the 1-hour chart? No, not yet. That's not how we trade this setup. We want to get precise, sniper entry-level precision. So the next step is to drill down to the 5-minute chart where we'll wait for the internal structure to give us a clean, low-risk entry. This is where the real edge shows up. 5-minute chart breakdown. What does the 5-minute chart reveal that we cannot see on the 1-hour? Everything. The same supply zone is still there. But now we get to see the microstructure unfold in real time. Price is climbing, but it is not aggressive. It hugs a clean ascending trend line, moving slow, deliberate, almost too clean. This is classic bait. It looks bullish on the surface, but we already know better. This kind of movement is designed to trap breakout traders. The ascending trend line and higher lows invite retail traders to go long, expecting a continuation. But we are 2 steps ahead. We know this zone is a trap, and the 5-minute chart is about to spring it. Then it happens. One sharp move, the trend line breaks, and a heavy bearish candle punches through. Fast, aggressive, and decisive. That's the trigger. Buyers are stuck above. Sellers are now firmly in control. The sniper entry. So when do we actually take the trade? Right after that break. The sniper entry comes either on the candle close, if the momentum is strong enough, or on a slight pullback for even tighter risk. And the stop loss? It's tight, placed just above the most recent swing high, which sits cleanly outside the supply zone. That gives us a clear invalidation level, precise risk control, a setup with serious reward potential. From there, price does exactly what we want. Fast drop, clean structure, no hesitation. This is real momentum. A setup like this easily delivers 2-to-1 risk to reward, and if you manage it well, you can squeeze even more from the move. Why this works? What makes this setup so reliable? Because everything aligns across multiple timeframes. You are not guessing. You are not hoping. You are reacting with structure and timing. You have a strong, clean supply zone from the 1 hour weak bait style price action climbing into it, a clear momentum and structural break, a precise execution trigger on the 5 minute twist. This is the full formula. It is how you move from random, impulsive trades to high probability setups that put the edge back in your hands. Final takeaway. What should you remember the next time price climbs slowly into a zone? Do not chase. Do not guess. Zoom out. Mark your levels. Let the market reveal the trap. Then drop to your execution chart and wait. Price action will show you everything if you let it. This setup proves it. Patience plus alignment equals edge. If you want more breakdowns like this, make sure to subscribe, check the links in the description, and apply these concepts to your charts every single day.